But back to crude, because that one has seen quite a bit of tumble of late, below the mark of $75 to the barrel. Vandana Hari, as promised, is with us. Vandana, hi, good to be speaking with you. Thank you so much for making time. What would you attribute this slide to, and is it a bit more structural or just a couple of days here and there, and then we should be back on the boil?
I hope we are not back on the boil soon. But very good afternoon to you, and thank you for having me. So when you look at what's happened to crude, specifically overnight, the 5% crash, you have to keep in mind a couple of short-term factors and medium-term factors as well. So in terms of medium-term factors, we've seen that over the past several months, market attention has turned towards pessimism with regard to global oil demand growth. A big chunk of that is on account of the continued sluggishness in Chinese economic growth, which shows through in their monthly macro data. Also in terms of their crude import appetite, which has been not very good. For 7 months of the year, their crude imports were down 4% year on year. So that's been the sort of ongoing narrative, I would say, for the past 2 or 3 months, which has been bearing down on crude. But more specifically, what we've seen yesterday, which has echoes of the market crash of August 5, is really major pressure from the sentiment in the broader financial markets. In that, specifically what is happening with regard to investor sentiment on the US economy. So yesterday, there was some manufacturing PMI data from the US. Now, of course, US manufacturing has been in contraction territory for nearly 2 years, but the numbers, as expected, were in contraction in terms of factory activity, but were even weaker than had been expected. So that seems to have jolted the markets. Just one caveat here as well is that in the normal course, perhaps this wouldn't have caused the kind of sell-off we saw yesterday. But I do detect as we get closer to the very crucial Fed meeting in the next in a fortnight exactly from today, it does seem that the investors are getting very, very jittery with regard to. Expectation is that the Fed will pivot. It will cut interest rates, but the big anxiety in the markets now is, will it cut rates at a pace that engineers a soft landing for the US economy? So as proxy for oil demand, the economic outlook is also turning into a drag on crude prices.
Interesting. So, Vandana, given the fact there is this possibility of no rate action, 25 bips hike or 50 bips hike, in each of these scenarios, what do you think will happen to crude?
So with regard to Fed and what the market hopes the Fed will do, what the market is betting the Fed will do, there's the September meeting, of course, that's going to be quite crucial, but equally the market is also paying attention to the slope of the Fed's expected rate cuts. So as I mentioned before, does it do it fast enough to satisfy the market that the US wouldn't spiral into a recession? So with regard to September, we have seen just between Friday and yesterday, the US markets were, of course, closed on Monday. The market bets on a 50 basis point cut seem to have risen. It's still in minority, but at least 40% of the bets were on 50 basis points cut, as opposed to about 30% of the bets being on that number last week. So what that tells me is that the market is getting more anxious, that perhaps the Fed cannot afford to go slow now. It needs to hurry up with the drop in interest rates. So going forward, to answer your question, I think the market will continue to keep a close eye on what the Fed signals in terms of its trajectory and what the US macroeconomic data shows. So in terms of the latter, the market is keeping a very nervous watch on the jobs data. We'll get the August jobs data on Friday. I expect that to inject some turmoil in the markets. And the US, of course, manufacturing PMI, consumer sentiment data, services in terms of, is the consumer still resilient, that kind of data. All in, basically, that's a lot of data, I know, but all in, I think it's just setting the scene for the market to be like a cat on a hot tin roof over the next weeks and possibly months.
And we do understand that there are demand concerns that have been pulling crude prices lower. But then OPEC Plus does have an option of not increasing the production or in fact lowering the production also. Do you think they will opt that option and try to keep crude prices above the $80 per barrel level?
Yeah, so it's good to discuss that factor as well. And the market has, I would say, almost the market sell-off has been exaggerated because the consensus view was that perhaps OPEC Plus will step in, because when they took that decision back at the beginning of June that they'll put about 2.2 million barrels per day back into the market, albeit gradually over a period of years starting from this October. Very quickly after that, when prices started responding to that with a slump, the ministers had said that, wait, this is not cast in stone. We could halt that. We could even reverse it in terms of, even deepen the cuts. But so the market, perhaps the oil bulls are a bit disappointed that OPEC has been very, very quiet. Personally, I feel it is difficult for OPEC for two reasons. One is that there's just so much flux in the market right now. I think it might be better for them to wait till the dust has settled, at least on the Fed's 17th, 18th September meeting, to see how the economic sentiment pans out. And the other is that it's really getting difficult now. These are very asymmetric cuts. We have to keep that in mind. Only 8 of the 18 OPEC Plus members that are bound by quotas are actually shouldering the burden of these cuts. So it's going to get very difficult for OPEC to push it out. And, there's no guarantee that 2025 is going to be much more conducive for them to bring this oil back into the market. So the window for them to reclaim market share is starting to close. Those are a couple of the reasons I think that OPEC Plus will perhaps stay the course for the time being.
Let's see whether they stay the course or not. But thanks.